Oh man, so Bitcoin is breaking down from a critical pattern as Jerome Powell realizes he was wrong and macroeconomic data comes into the downside, suggesting more pain ahead. What is going on? We're going to break that down in a lot more. So guys, check this out. Bitcoin forming this double top type pattern here, breaking the neckline as we speak here. Now second daily candle below this neckline. If you take the measured move, this brings you down here to levels back around the 19,200 range. It could be quite painful as we work our way back to the bottom of this channel where we initially exploded from. I'm going to be breaking down the key levels, but so far we've seen some bad economic data come through. Remember, we are in this position where January had really bad data. We were hoping that that was just a blip, that things were going to be better, but the Feb data is coming out with vengeance. We just had the ADP private jobs figure showing 242,000 new jobs created. The expected was 205,000. So a big miss to the upside, showing that the labor market is still really hot, which is the worry of the market. If you also take a look, which is what a lot of people are not talking about, they also went ahead and revised the January figure from 106,000 up to 119. So that's like insult to injury, right? We were expecting maybe a revision down on January. It wasn't as bad as we thought. Nope, that got revised up, plus a bad February figure. And this is how we're now shaping up. Does not look good there with that big candle there at 242,000 new jobs. But it didn't stop there. We then got the jobs figure, the jobs openings figure came out. Yes, it has fallen slightly, but it came in at 10.8 million versus the consensus 10.5 million. So even with the job openings, there are more and more openings on the market, showing how tight this employment market is. And Jerome Powell now has to sit there and go, was I wrong? Did I mess this up? I came out really dovish, speaking about disinflation, lowering the rate hike to 0.25. And now we sit here with a Fed funds projection with 80% of the market, 82% of the market. Guys, when we were making videos, we were looking at this when nobody was pricing in 50 basis points, then 10% price in, then 15. And what did I say? Guys, watch out for this. Remember when I said Q1 and Q2 was going to be very juddery, going to be very stop and start, very painful, a lot of volatility? This is what I meant. It's like landing an aeroplane. You think you're going to land, you think you can land, then they're like pilots like, we're going round. That's exactly what I said. And you're seeing that happening right now. Jerome Powell's now backtracking, caught off guard, and now many are projecting that he's going to have to go and do 50 basis points. And they're not waiting for him to do it. They're pricing it in now. The market is not messing it around. It's pricing it in right now. So that's what we're seeing here in the markets. You're also seeing this. I want you guys to take a look at this. This is very important. This is known as the five-year forward inflation expectation. We were talking about this on our live stream. If you haven't watched that, go watch that. We live streamed the testimony from Jerome Powell. If you have some time, you can go and catch up on that. Now, if you take a look, we were sitting here on the expectation of 2.33. This is what the market's expectation of inflation is. And then when Jerome Powell spoke yesterday, he dropped it back down. And that would have exactly been his mission yesterday. Because if we zoom out, what you see is when the pandemic period was 1.2 and then really working its way back up to 1.5, 1.6. The Fed will want this to come to that 1.6, 1.8 mark. It does not want this elevated here at 2.33, that's for sure. So they want to bring this down, okay? And they're going to do that with their hawkish tone plus their rate hikes. Let's take a look at what this means for the dollar index. The dollar index yesterday having a bumper day yesterday, bouncing off its daily EMA ribbon, and it's all but confirmed that it's retested it and reclaimed it here on the daily chart. To add insult to injury, let's notch this up to the weekly. And the dollar index is days away, 2 days away from closing above its weekly EMA ribbon and reclaiming the weekly EMA ribbon after this period of a downtrend. The risk is rotating off again, and markets are now starting to panic that Jerome Powell is not in control of this. Weeks ago, we were like, how is Jerome Powell going to pull off a soft landing? It turns out he's not quite in control of the ship. That calm demeanor isn't quite on top of inflation as we know it. We also take a look at the US 10-year. You see the same thing, bouncing off of its weekly EMA ribbon on the daily chart as well, showing really good strength here over the recent period, pushing it past 4%. Now sitting at 3.93. But again, showing that risk is rotating off as this climbs, as the dollar index climbs. That's inversely correlated to crypto. Bad for Bitcoin, bad for altcoins, good for risk off stocks. So the question then arises, where is support for Bitcoin? Where could we be heading? Well, first and foremost, because I'm going to give you a bunch of doom and gloom, I want to give you the one positive we do have, and it's only just. And that one positive is we haven't quite created the lower low. We haven't quite come back down to this bottom here, which would then ultimately form that lower low. So this doji candle bottomed up at 21,366. So if you fall below this level, then you've created a lower low. Until then, you still have an opportunity for Bitcoin to do the unimaginable, bounce here at 22 and go create a higher high and keep the momentum up. Now, the reason I'm saying unimaginable is the macroeconomic data is not marrying up to a bullish scenario. Yes, the technicals can show technically we can bounce from 22,000 because that's an important level. But the macro data, which I've just gone through, is not looking great, right? It's showing that we're going to have to increase rates for longer, get to a higher terminal rate, and this year is going to be painful. So before we had this chance where end of Q3, maybe Q4, we could have started seeing the market start to improve. Now I'm starting to think, if we get 50 basis points at this next meeting, that's a write-off. Like 2023 is just going to be a painful year, and it's going to be a year for accumulation, a year for me to eat my veg in Bitcoin, Ethereum, and not expect any crazy returns on altcoins. That's what this is going to tell us if we have to go back to 50 basis points. So this is what I'm seeing here. That is the bullish scenario, is if we bounce from 22. And 22 is an important level. This is the channel which we've been in for a very long time. Anybody who says technical analysis don't work, look at this 22 level. It's a very important level. If I drop it down to the 5-minute chart, remember that green line is 22? Look at this on the 5-minute chart. It's trying to break below. The bears are trying to push it below 22,000, but they can't. And it bounced just a couple of hours ago while Jerome Powell was speaking. It bounced from here as well. So this is an important level, but if we do lose it here on the daily chart, that could spell some pain. So for me, I'm not desperate to buy the dip right now, because if we fall from this level, I'm expecting more pain. Like I shared here, if this pattern falls, I'm expecting us to start heading back down to some of these levels, okay? Down at around 20,000. So if you look for support, where you'll see support start to come in is if it fails 22, the next key level is 20, and then you've got 18,700. Those are the levels I'm working with. If we bring out the EMA ribbon on the daily, what do you notice? You notice this 200 exponential moving average could act as support. Okay, so not only do we have this 22,000 horizontal support, we've also got a 200 exponential moving average. If none of this is making sense, by the way, if I'm speaking about things which you can't quite keep up with in terms of EMA ribbon, exponential moving average, if none of this quite makes sense, ijaz.uk/TA, check out the course, completely free, take advantage of it. Also, you've got a link to BYBIT in the comments, and they've just shown me that they've now set up copy trading. So definitely check out copy trading, guys. This is really interesting because, you can follow one of these traders. You can go in and say, you know what, I want to follow Apple Trading. He's proved that he's done 157%. Okay, 157% returns over the last 3 months. So he's a proven trader. He's done 50% over the last 7 days. I'm just going to click copy. I'm going to allocate $100, $500, whatever you guys feel like, and it will copy his trades for you. So you can go ahead, see who are the most profitable traders, follow those guys, who's got the most followers, look at their returns, and you could just allocate some money to your favorite. It's like accessing a hedge fund. It's insane. So definitely check that out. Link is in the description to do that. You're also going to get bonuses by using my link in the description as well. I also want to bring out the Bollinger Band here on the daily chart, because you can see here on the Bollinger Band, we are coming to the bottom of this Bollinger Band. Normally that can act as support, but if we break through this and break the structure, we could be getting a painful vibration to the downside, back to that 20 level, that 19,700 level. That is what we're going to be looking for. For altcoins, there's no point me looking at altcoins right now, right? Phantom, down 5%. Matic, down 5%. They understand where we're at in terms of the macroeconomy. So pay attention to the macroeconomy, pay attention to Bitcoin, and your altcoins are going to overreact whatever Bitcoin does. If Bitcoin's down 1%, some of your altcoins are going to be down 4, 5, 6%. That's just the way it goes. Let's also take a look here at the weekly chart, because on the weekly chart, this is where the pain arrives for Bitcoin. Because as I said throughout, I'm going to keep mentioning it, bear market rally. But I was one of the few that was still acknowledging it was a bear market rally. We were still going against trend. We were swimming against the ocean, the tide. But I still took part in it. I still took part in this from 15,500 all the way up to 25,000. Why would I sit on the sidelines? I made some amazing gains here. I was able to increase my portfolio size. But at the same time, I understand that on this weekly EMA ribbon, we never reclaimed it. We never reclaimed it. And this is now just, I told you so, facing resistance at the weekly EMA ribbon. You guys can go find my videos speaking about this in early January, even before then, when people were not talking about it here. I said, watch out for this weekly EMA ribbon. It is not going to be an easy level to break. And now that resistance coming in. So what we need to see from Bitcoin is we need to see it come down, hold some support. Where's that support going to be? We don't know. Is it 20,000? Will it need to come back down to 18,000 and then go mount another attack over the next couple of months back at that weekly EMA ribbon? I know it's the long game. I know it's not what you want to hear, but the macro economy is not in line just yet. Jerome Powell hasn't got control of inflation, and therefore that excitement needs to unwind now. Now, the last thing I'm going to share with you, in case I haven't given you enough alpha in this video, is one slight bullish argument, which I do want to keep an eye out. Remember, I'm always checking my thesis. Now, a lot of the data right now is bearish because I give a heavy weight to the macroeconomics, but from a technical perspective, which you guys know, I blend technicals with my fundamentals and come up with a story, I can take swing low here from our lows here, all the way up to the highs of 25,000 that we've recently hit. And when you apply those Fibonacci ratios, what do you notice? Your golden ratio is here. Your golden ratio, your 0.65 to 0.618 level, is between 21,800 and 22,000. So you can see here, this is a very important support level. So if Bitcoin wants to build some support from the Fibonacci pocket, golden pocket, and then work its way, that could be a bullish scenario. Either way, we know this is a critical level. We got rejected from 25. We're on our way down. Are we going to create the higher low and show some strength, or are we more likely to dump? My bias is to the downside right now, given the macro economy and given the fact that inflation and the jobs market is starting to get a little bit shaky. We've got huge data still coming out. You've got the Fed's beige book coming out later today. I will tweet if there's anything important coming from that. Generally, it's not too much of a noisy picture. We then on Friday have the non-farm payrolls. Very important job market figure, which the Fed used to determine their rate hikes. Next week on the 14th, we get CPI. We also get PPI inflation. Both of those are going to be critical because Jerome Powell looks at those. And then on March the 22nd, we finally find out if we're going to get 50 basis points, which is going to upset market, or 25 basis points, which also will upset markets. We're damned if we do, damned if we don't right now. If Jerome Powell does 50 basis points, he's lost credibility. He reduced to 25 and then suddenly he's gone back to 50. If he stays at 25, the market's going to be saying he's in denial. So either way, this market's a very volatile, very tricky market. I've got my DCA hat ready to buy the dip if we get some painful lows. Let me know what you're doing in the comments. Don't forget to go watch this video here, and I'll see you in the next one.